Welcome to Profile Traders. Thank you for listening to this market analysis for Thursday the 5th, I believe. What we are seeing here is that after a very vicious series of back and forth where the market was in a very nasty mode of confusion, we finally decided, don't ask me why, for whatever reason, to exit now out of the 2050 to the upside with a close at the very high of the day. Now we are approaching very important critical point. If we can clear this zone of 60 to 65, market will be on a breakup mode and most likely it is going towards testing again the 2100, and eventually if we do break that one up, we are going to go towards that daily resistance line that I showed you several days ago. But what is worrisome again is that if we look at the volume on the way down and the volume of today, which engulfed entirely yesterday, is not even close to yesterday. So this whole charade was again down on very low volume. As far as fundamentals, I have no clue, no idea what is the rush to be buying markets with this kind of impatience right around 2050 or 2060. But you know it better than I do it, that this market is no longer a market, but it's the ATM machine for a very selective few that are hand in hand with our corrupt system, and they are allowed to manipulate it as it pleases them. Today they were manipulating it up with a close at the top. So we carefully watch now 2060 for a break up towards 65. The most significant resistance is 2065, and then on the downside we are looking for a breakdown of 2049 to go towards 2043, which is the most significant support. Therefore the main support resistance are 65 resistance and 2043 support, and before it goes to either side, these are the other sub levels that we need to break. Now crude is also acting up a little bit. You have to understand that when something collapses from $114 to $42 in a matter of months, and there is so much profit in hand of short with such a carnage from the long side, that it will reach a point where it becomes so cheap, as I explained many times, that number one, cheap oil will make production drop because there is no more incentive for anyone to go dig. Number two, it creates an excess demand because it is so cheap that the little redneck doesn't mind to go and put the snake boots on the pedal and gas the F350 to the max, and all that will create excess demand because of cheapness. So a balance comes into place where there is no more downside left. Therefore three things happen. The shrewd players that took the ride down, they cover their short profits. That creates demand. Number two, the dumb idiot, the clueless idiot that sold towards the very, very low is caught very badly. He has to cover his sales. That creates demand. And number three, you also have longer term investors that believe that buying it at 44, 45 is not a bad deal because downside is going to be limited to what, $5, $6 more, big deal. But as you can see, upsides when they kick, they can be 7, 8, 10 points rallies. So we saw that happening, and now that's most likely out of the system. And that Mr. Saudi, who came 2 days ago and warned us that oil may reach, or we should prepare ourselves for oil at $200 a barrel, may I respectfully ask him to come and kiss my behind, if he could. All fantasy and dreams. So now that these whole three elements that I just explained are out of the picture, now we are going to be again into a balancing act. In the very big picture, there is the big trend line down up there waiting. That trend line will not be a joke. Once we're gonna touch that trend line that is joining the trend from way up there, it's very difficult to break it. Therefore, the crisscross of these two lines, that would be my sell zone in there, in that death triangle. And that should range from, I would round it up between 55 to 58. 55 to 58, it will be a wall of resistance for crude. Meantime, we need to break back below 50, obviously. And once we break below 50, we have a POC down there at 48.90-ish. And then another one that is down there at 47. Do not be at all shocked by days of $2-3 fluctuation, violent back and forth, very brutal, and no rooms for mistakes. So if you do not know what you're doing and you're a novice, please save yourself a lot of pain by trying to trade crude, because at this point of the game is absolutely the most aggressive market that there is out there, in my opinion. As far as gold, nothing. I mean, we can now see that there is a bottom being built at 57. If that breaks, most definitely we should then go towards 1250. 1250, very important support zone. We should not break down. If we do break down, that means this whole consolidation at the top will be a failure, and we could see a severe drop towards 1218, 1220. We remain above this 1250, 1257, then we should target two POCs up there, one at 1271, I'm sorry, one at 1270, almost 1272.8, and another one roughly around 1275. And of course, for those two levels to be reached, we have to clear today's high, which stands about 1268.5. This was Reza with ProfileTraders.com. Talk to you later.